Hey everybody, Brian Shannon here from alphatrends.net. It is Friday the 30th of January 2015, and the market is closed for the month of January. We had a losing month here for equities. The S&P 500 down close to 3%, Nasdaq 2, Russell 2000 3.25%, 3.5% for the semis. Oil still down year to date, obviously, after a big rally today is the only thing that turned it positive here for the week, but still having an awful year, of course. And the biotechs were down a little bit this week. They still continue to be the strongest group. The US dollar lost a little ground, and bonds were up yet again. So this is why we trade. This market's been very volatile this year, and we've seen a lot of back and forth action, and it seems as though it's just weakening more and more here. We don't have a breakdown, of course. We've been kind of range bound, and that range has been really the support down here between 198 and 198 and a half, 198 to 199, and this 199 is actually what the 38.2% retracement of this rally here off the October lows. So we're continuing to see a very volatile market. In fact, let's look at the year-to-date volume weighted average price, which we are stuck below right now. So last week we had the market looking like it was trying to recover. We had the higher highs and higher lows. We became cautious on Monday because we had the lower high, and then of course that gap lower that trapped us below the declining 5-day moving average. We are guilty till proven innocent on the intermediate term, and again, this bigger band of support keeps getting tested, and the more times any type of support is tested, the more likely it is that the buyers will give up that continuing to defend that level, and from there we it's likely that we will see further downside next week. Maybe on Monday we get a little bit of a rally, perhaps up towards 200 and a half to 201, and then break down. We did see, this was a pretty swift sell-off here today, and right from the volume weighted average price year to date, I'll add for the week rather, that we got up to that year to date weekly volume weighted average price yesterday afternoon, and then again this afternoon, and today we really gave it up. So we've seen a lot of volatility. We saw the gap lower, the gap higher, then kind of a flat open, a gap down. The market is showing a lot of volatility. You don't want to short necessarily, let's say, underneath this level here if it opens down there on Monday. Instead, it'd be better again to see a rally up and then to look to short weakness. But right now we are still holding above the key band of support, but it just seems like it's ready to being close to giving up. And here's our longer term uptrend on that S&P 500, looking at the weekly time frame. For the Nasdaq, we're kind of obviously in a similar position where we have this bigger band of support, 99 and a quarter really to about 100, and that's the important level. We have a 50-day moving average which is declining. We had seen that the market tried to break that pattern with this higher high right here, but it was extended. It pulled back and continued to pull back. It didn't show any support. If you recall last week, I was talking about the bullish scenario would be for a pullback down towards this 5-day moving average to find support and then to bounce higher. That would have given us a nice higher low, but instead, of course, we had that gap lower here on Tuesday, and then we remained trapped below the declining 5-day moving average. We also got back below the volume weighted average price year to date in here. In this year to date chart, you can see, this is why we trade. This is exactly why I'm a trader and not an investor. With this type of volatility, it's just got to be mind numbing to be an investor. The Russell 2000 also back below its volume weighted average price in here for the year. This daily chart still really a bigger mess. I guess you could kind of, maybe say that this little trend line is something of significance, and it might be starting to look more like a head and shoulders top, although it's really ugly, that pattern. I wouldn't read too much into the pattern other than we have a market that's having a very difficult time moving forward, and we're back stuck below a declining 5-day moving average with lower highs and lower lows. The semiconductors lost more ground, of course, here this week as well, with that gap lower on Tuesday, and here in this market, the bigger support is down really right from here down towards that 52 level. This is kind of, if we, we're kind of entering what I would say, it becomes more neutral in here because of the energy that it's taken to get down to this level, that, shorting just below that level isn't always the best idea. You often get a very short-term break of support, and then it'll rally, and then you have a better opportunity to short after that rally develops, if it does. But here we can see we're guilty till proven innocent on an intermediate-term time frame with lower highs and lower lows. So there's no point trying to buy this market at this point. The financials lost further ground, and they did make a new low for the year. And the pattern of lower highs and lower lows obviously continues for the financials. We are down below the 200-day moving average in the financials as well. And just to give you that perspective for the S&P 500, if we were to get down to the 200-day moving average, that's 197.5, and that certainly seems reasonable that could happen. The Nasdaq, the 200-day moving average, you can see is much lower than that. So we've got longer-term outperformance by the Nasdaq. But anyways, back to the financials. We're below the 200-day moving average. We have, more importantly, a pattern of lower highs and lower lows below a declining 5-day moving average. So we're guilty till proven innocent. And even, on Thursday in Alpha Trends, we had gotten involved in the SPY long right here. Our initial stop was there, and we were looking for it to get up to the pivot, and it exceeded that. But there's opportunities both sides of the direction. Both sides of the market, rather. It depends on how aggressive you are and what your personal time frame is. If you're an investor, again, this has just got to be really maddening. Anyways, back to the financials. They're guilty till proven innocent. Obviously, we know that. The U.S. dollar continues to be strong here. It was, for the week, what did we have? We did have it just slightly lower, but it holds on to its gains. I'll point out in gold, only because it's interesting that it touched on the year-to-date volume-weighted average price. So if you are an investor in gold, or even trading it, back below 120 is probably the issue there. But bonds continue to roar higher. That's obviously keeping interest rates declining. And for as far as the individual stocks go, we saw some just incredible volatility here and really a mixed bag. Let's start with Apple. They reported earnings. It gapped higher. So there was nervousness, obviously, in front of the earnings as it closed near the lows. It gapped up. And now the volume-weighted average price since the earnings, which was 3 days ago, you can see we undercut that here today. We also got involved yesterday in Apple right here for a day trade and made a really nice trade of it. And it's good to be, have that flexibility as a trader with such volatility in these markets. For Apple, I think we want to see it pull back down towards 114 to 115. This prior band of resistance, we'll still consider this stock innocent until proven guilty overall, but it's pulling back a little bit. So let's see if the prior resistance in this area does hold as support. Let me talk real quick about oil too, because again, oil had a big day today, up 7%, but this is just a blip. We're still clearly in a downtrend. There's nothing here that indicates anything more than an attempt at stabilization and a little bit of a short squeeze in oil for today. And for the week, looking at this weekly chart, you can see here there's been nothing interrupted here as far as this downtrend goes. So still, it's you can trade these things for for these bounces. Here's a 30-minute chart. Great rally in there, right? $3 in the course of 3 hours or so. But back to the weekly time frame, or even the daily time frame here, we're still clearly in a downtrend on oil. Amazon, we've been talking about this stock as far as it being at a important level here, and that the pressure was building with these lower highs. Well, this is what earnings reports are capable of doing, is reversing that completely. They also are capable of bringing a stock like Boeing out to what I believe are all-time highs here. So Boeing had a great week, but then you look at stocks like Alibaba, continues to be a problem here. It, got back below that year-to-date volume-weighted average price and then gapped lower. So, once it's back below the 5-day moving average, you got to look at it as guilty till proven innocent. And now Alibaba is really kind of a broken stock, I think. And that also is the case for Yahoo, which was down this week as as well. It's had a massive run, and now it's running into a lot of problems here. Google, I thought, was interesting that the company reported earnings. The headline was 20 cents less than expected, but here you can see up on massive volume here today. So it seems as though Google is really kind of trapped shorts under here and is trying to turn sideways and neutralize. It's still quite volatile, and this is going to be a key level for it for the next couple of weeks. But it's obviously behaving a lot better, whereas a stock like GoPro continues to look like garbage here. It's stuck below, or it's back below that 5-day moving average, which is declining. I would expect further weakness in there next week. Intel reported earnings this week, and it was a disaster for them, as it was for Microsoft and for Qualcomm. So these are broken stocks. Just stay away from them. Each day in Alpha Trends, we're identifying some great day trades in the chat room and in the end of day videos as well. So if you haven't taken a look and you're looking for a way to harness some of this volatility, come take a free trial for a week, and hopefully I can help you make some money and keep you on the right track and right side of this market. Have a good weekend, everyone.